429 million ounces of paper silver, 103 million ounces of physical silver. One number is 4 times the other, and the gap is getting wider every single day. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, the 70-day depletion clock is running on COMEX registered silver. Let's get straight into it. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today, COMEX warehouse reports. 103 million ounces of registered silver remaining, 429 million ounces of open interest. Paper claims that legally require deliverable metal. Coverage ratio, 24%. Over the past 30 days, 23.6 million ounces physically withdrawn from COMEX vaults. That is a 23.1% decline in 30 days. At this pace, registered silver hits critically low levels within 70 trading days. That is not an estimate. That is the arithmetic of the current drain rate applied forward. The unusual detail is not just the number, it is the acceleration. The rate of withdrawal is not slowing. Think about what that sequence actually means. Every ounce pulled from a COMEX registered vault is an ounce that can no longer satisfy a future's delivery obligation. The registered pool shrinks, the paper claims do not. When does that equation resolve? The ones paying attention already know what to watch next. Before I show you the full data picture, consider this. The last time the COMEX silver coverage ratio dropped below 20%, silver was trading under $30 per ounce. It is now at $83.98, and the coverage ratio is already at 24% and falling. That is not coincidence. That is a pattern. Let's build it out. Now let's build the full picture, because the COMEX vault drain does not exist in a vacuum. CME Group warehouse reports confirm 103 million ounces, registered as of this week. COMEX open interest stands at 77,890 contracts, representing approximately 429 million ounces notional. The Silver Institute's 2025 World Silver Survey documented a global silver supply deficit of 182 million ounces, the third consecutive annual deficit. The Silver Institute projects the 2026 deficit to exceed 200 million ounces. Fresnillo, the world's largest primary silver producer, cut its 2026 production guidance to 42 to 46.5 million ounces. That is a 9% reduction from prior estimates. Hecla Mining and First Majestic Silver are also guiding production lower. Mexico's, which represents approximately 25% of global silver supply, maintains its moratorium on new mining concessions. The Silver Institute confirms new mine development requires 7 to 12 years from discovery to production. Supply cannot respond to a price signal in any meaningful near-term time frame. The rate of vault depletion is not slowing. It is compounding against a supply picture that cannot accelerate. The data is doing the talking. The ones who called the silver supply deficit a theoretical projection, they are not saying much right now. And here is what makes that picture even harder to ignore. The Shanghai Gold Exchange AG T+D contract is pricing silver at approximately $87 to $89 per ounce in USD equivalent. COMEX spot is at $83.98. That is a $3.50 to $5 physical premium, the East paying more than the West for the same metal. At the same time, VXSLV implied volatility sits at the 82nd percentile. The options market is pricing meaningful upside probability in the $90 to $105 strike range. Open interest at 77,890 contracts remains elevated. Registered silver at 103 million ounces continues to fall. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups can take a long time to resolve. The structural picture and the timing are completely separate questions. A coverage ratio of 24% does not mean a squeeze happens tomorrow. It means the margin for error is shrinking every day. Anyone who claims to know the timing is selling something. Now, the macro variable, because this is no longer a backdrop. It is a direct input into the squeeze probability. Here is the number most people are not connecting to the vault data, 182 million ounces. That is the documented 2026 global silver supply deficit projected by the Silver Institute, before accounting for any demand acceleration from the Iran conflict. The U.S. Energy Information Administration confirms oil is above $100 per barrel. PCE inflation confirmed by the U.S. Bureau of Economic Analysis sits at 3.0%. The U.S. 10-year Treasury yield is at 4.2245%. The U.S. dollar index is at 99.97. Those four numbers together represent a stagflation environment. Growth slowing, inflation sticky, Fed frozen. In stagflation, monetary metals historically outperform. Gold reached $5,223 after the U.S. and Israeli strikes on Iran on February 28th. It holds above $5,100 today. Silver reached $85.45 this week. Markets are still pricing the silver supply story as a slow-moving structural narrative. Look at 23.6 million ounces leaving COMEX vaults in 30 days, and tell me what probability you put on slow-moving. When markets start pricing the reality of what simultaneous supply deficits, vault drain, and Eastern premium actually mean, silver reprices higher with velocity. That is the historical pattern. Every time physical demand has outrun registered supply at this pace, it has not been different yet. Silver Western spot at $83.98. Shanghai Gold Exchange EGG T plus D at $87 to $89 USD equivalent. That is a $3.50 to $5.00 premium. The week's range was $81.63 to $85.45. The $81.63 low was bought aggressively. $84 has held on multiple intraday tests. Short term, the picture requires honesty. If the May COMEX delivery month triggers accelerated physical demand and the coverage ratio drops below 20%, silver breaks $90 and the $100 level comes into structural range. If global recession fears dominate and industrial demand projections are cut, silver decouples from its monetary story and tests the $72.50 major support zone. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what silver does Monday morning. Nobody can. If you think you know, good for you. VXSLV at the 82nd percentile means intraday moves of 3 to 6% are not tail events. They are the operating environment. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. DXY at 99.97 with momentum toward 101 creates direct headwind for dollar-denominated silver. The 10-year yield at 4.245% keeps the opportunity cost of holding non-yielding silver elevated. Global recession fears, driven by oil above $100, could cut industrial silver demand projections sharply, sending silver to the $72.50 major support level. The bull case is equally real. COMEX registered silver at 103 million ounces. Against 429 million ounces, open interest is a 24% coverage ratio, and it fell 23.1% in just 30 days. Shanghai is paying $3.50 to $5 above COMEX spot. Physical Eastern demand is documented and priced in the market today. Fresnillo cut 2026 production guidance 9%, Mexico holds its mining moratorium, and the Silver Institute projects a 200 million ounce deficit. Supply cannot close this gap in any near-term time frame. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. The 70-day clock is the number that matters, not the daily price, not the weekly chart. The vault, 103 million ounces, falling, against 429 million ounces of paper. The structural pressure is already built. The only question is when the paper market catches up to what the physical market already knows. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group COMEX Warehouse reports at cmegroup.com. The Silver Institute World Silver Survey at silverinstitute.org. U.S. Bureau of Economic Analysis, PCE data at BA.gov. Logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0, out.